Did you know that the traditional financial system, with all its banks and intermediaries, takes a cut of nearly $2 trillion per year in fees alone? That's enough to buy every single Bitcoin in circulation at current prices. Now let me ask you, how many times have you grumbled about the high fees charged by banks, or the time it takes for international transactions to process, or the sheer amount of paperwork needed to get a loan? Interestingly, DeFi is here to disrupt this multi-trillion-dollar industry. So what's all the hype about? It's like everyone and their grandma is talking about DeFi these days. But why? What's causing all this buzz? Is it just a fad, or is there more to it? First of all, the numbers don't lie. The total value locked in DeFi, a key indicator of the amount of cryptocurrency locked in the smart contracts of DeFi applications, has skyrocketed from a mere few $100 million in early 2019 and $40 billion in 2021. It's surged to a staggering $110 billion in January 2024. And guess what? It's still growing. What is DeFi? Okay, now let's come to the point. Grab a cup of coffee, sit back, and let's talk about what this DeFi really is. DeFi, short for decentralized finance, aims to create an open and accessible financial system. But how does it do that? Well, it's all in the name decentralization. You see, traditional finance is centralized. You have banks that hold your money, lending institutions that give you loans, insurance companies that protect your assets, and so on. And the catch is, all these institutions act as intermediaries, and they have total control over your financial transactions. Now imagine a world where you don't need these intermediaries, a world where you have complete control over your financial transactions. Too good to be true, right? Well, that's what DeFi promises to deliver. It aims to build a financial system that's open to everyone and doesn't require trusting intermediaries like banks. Think of blockchain as a digital ledger that records transactions across many computers so that any involved record cannot be altered retroactively without the alteration of all subsequent blocks. This kind of allows users to verify and audit transactions independently and relatively inexpensively. To make this work, DeFi has smart contracts. They are self-executing contracts with the terms of the agreement directly written into code. They automatically execute transactions when certain conditions are met, eliminating the need for an intermediary. Suppose you want to borrow money. In the traditional financial system, you'd go to a bank, fill out a ton of paperwork, and wait for approval. With DeFi, you can simply use a smart contract on a DeFi lending platform. You lock up your crypto assets as collateral, and voila, you get your loan. No paperwork, no waiting. Apart from loans, DeFi applications are being developed to mirror almost every traditional financial service, from savings and checking accounts to insurance and more, all without the need for a bank or any other intermediary. According to a report by Statista, the DeFi market is projected to reach approximately $37.04 billion by 2028, with an annual growth rate of 9.07% from 2024 to 2028. Well, we've got the basics done. Let's dig deep and explore the 5 main pillars that maintain the stability and efficiency of the DeFi ecosystem. Pillar 1. Starting with the first pillar, stablecoins. We all know one of the biggest challenges with cryptocurrencies like Bitcoin or Ethereum is their volatility. One minute you're like on top of the world, and the next you're staring at a screen wondering where it all went wrong. This is where stablecoins come in. They are a type of cryptocurrency that are designed to maintain a stable value relative to a specific asset or a pool of assets. They are often pegged to a currency like the US dollar. This means that unlike Bitcoin, which can swing wildly in value, a stablecoin will always be worth about the same amount. Tether, USDT, is one of the most popular stablecoins out there. One Tether is always worth about $1. This stability makes it a safe haven for investors during volatile market conditions. Stablecoins are often used as collateral for loans, a medium of exchange in decentralized exchanges, and a way to earn interest in lending protocols. So while they might not be the most exciting part of DeFi, they are certainly one of the most important. Pillar 2. Moving on to the second pillar of DeFi, lending and borrowing. Like we mentioned earlier, in banks, if you wanted to get a loan, you'd have to go through a lengthy process involving credit checks, paperwork, and a whole lot of waiting. But in the world of DeFi, lending and borrowing is as easy as a few clicks. For that, DeFi lending platforms use smart contracts. On the flip side, borrowers can take out loans by providing crypto assets as collateral. Let's take Compound, a popular DeFi lending platform, as an example. As a lender, you can supply your assets to Compound's liquidity pool and earn interest. As a borrower, you can borrow assets from this pool by providing collateral. The interest rates are algorithmically determined based on supply and demand. Keep in mind that as these platforms are built on blockchain, they are open to anyone, anywhere. You literally don't need a credit history. All you need is an internet connection and some crypto assets. Pillar 3. Next up, the third pillar is DEXs. Man, another short form? Seriously? I can understand it stands for decentralized exchanges. Now, if you've ever traded stocks or cryptocurrencies, you're probably familiar with exchanges. They're like the bustling marketplaces of the financial world. But DEXs, they're a whole new ballgame. In a traditional exchange, the exchange acts as an intermediary, facilitating trades and holding onto your assets. But in a DEX, there's no middleman. Yes, trades are made directly between users through smart contracts. Uniswap is one of the most popular DEX. On Uniswap, you can swap any two Ethereum-based tokens directly without needing to go through a central order book. This means you can trade at any time without needing to worry about finding a buyer or seller. DEX also offer greater privacy, as you don't need to disclose personal information to trade. No more restrictions based on location or financial status. Pillar 4. Moving on to the fourth pillar, insurance. Insurance? That's as exciting as watching grass grow. Wait, hear us out. We all know insurance is a way to protect yourself from financial loss, right? But it's often a long and complicated process involving lots of paperwork and bureaucracy. DeFi aims to simplify this process using, of course, smart contracts. Take Nexus Mutual, a DeFi insurance protocol, as an example. Nexus Mutual uses blockchain technology to create a shared pool of funds that can be used to pay out claims. As a member, you can buy coverage, and if a claim is approved, well, you get paid from the shared pool. Keep in mind that claims are approved by the community, not by an insurance adjuster. This means fairer, more transparent coverage. Pillar 5. Next up, the fifth pillar of DeFi is margin trading. If you've ever dabbled in stock trading, you might be familiar with this concept. It allows traders to borrow funds to buy more stocks or assets than they could with just their own money. It's like a turbo boost for your trading power. However, it also comes with increased risk. If the market moves against you, you could end up losing more than your initial investment. Now let's bring this concept into the world of DeFi. In DeFi, margin trading platforms use smart contracts to enable traders to borrow funds and trade with leverage. This means you can potentially amplify your profits. DYDX is a popular DeFi margin trading platform where you can trade with up to 5x leverage. This means that with just $1,000, you can open a position worth $5,000. If the market moves in your favor, your profits could be significantly higher than if you were trading with just your own money. Getting started with DeFi, all right? We've talked about the hype, we've dissected the pillars, and now it's time for the main event. Getting started with DeFi. If you're a beginner, it's okay. Trust me, you don't need a degree in computer science. DeFi is actually easier than you think. The first step is to understanding the basics. It's very important to understand what blockchain is, how smart contracts work, and the basics of cryptocurrencies. We've covered some of this in our video, but I'd recommend doing some additional reading. There are plenty of resources available online like podcasts, YouTube channels, like this one, *chuckle*, that can help you get up to speed. The next step is to set up a digital wallet. This is where you'll store your cryptocurrencies. There are many wallets to choose from, but some popular options include MetaMask, Trust Wallet, and Coinbase Wallet. Oh yes, when setting up your wallet, make sure to keep your private keys safe. If you lose them, you lose access to your funds. Once you have a wallet, you'll need to buy some cryptocurrency. You can do this on a centralized exchange like Coinbase or even Binance. The type of cryptocurrency you buy will depend on what you want to do in DeFi. For example, if you want to use Ethereum-based DeFi applications, you'll need to buy ETH. Now that you have some cryptocurrency, it's time to connect to a DeFi platform. This is pretty simple, like visiting the platform's website and connecting your wallet. Some popular DeFi platforms include Uniswap, Compound, and Aave. Once you're connected to a DeFi platform, you can start interacting with DeFi. like trading tokens on a DEX, lending or borrowing funds, buying insurance, or even participating in yield farming. At last, it's very important to stay safe. DeFi is still a relatively new space and there are risks involved. We suggest always do your own research, be wary of scams, and never invest more than you can afford to lose. And that's a wrap. So what was your biggest takeaway from this video? Are you considering getting into the world of decentralized finance yourself? Drop your comments below. Before you go, don't forget to check out our recent video on what is cryptocurrency and how to get started. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.